The chairman of Sprott U.S. Holdings joins us now at the New Orleans Investment Conference. Rick Rule, he's back. You're a speaker here at the show, and your presentation is called Where Do We Go From Here? So that's what I'm going to ask you today is, where do we go from here, Rick?
Well, I have two themes in that talk. The first is, of course, the precious metals market, which is already underway and now in a hiatus. My belief is that the hiatus in gold and silver and the gold and silver stocks probably continues for another 3 or 4 months. In other words, we go sideways to down for a while, but then I think we start going up again. Okay. So in the first instance, where do we go from here in the precious metals market and the precious metal stocks is an interesting question. I think next year we see a fairly strong US dollar. So I think the growth in the gold price in US dollar terms is muted, but still positive.
Okay.
I saw this in 1975. I saw it in 2002. This has happened before, where gold and the US dollar go up simultaneously before the US dollar rolls over. I believe in this case past is prologue. But a more interesting question is, where do we go in the rest of the natural resources complex? Where do we go in things like uranium? Where do we go in agricultural metals? Where do we go in the other materials? And I believe that we're putting in place the building blocks of a real bear market there, a real bull market there too.
Right.
But I don't believe that that's immediate. I believe it's imminent, but I don't believe it's inevitable.
And I want to get back to uranium, because it is at a 7-year low, and a lot of people are thinking, is that the end of the bear market? It's really a hot topic. People are interested in uranium. Mark Cuban just endorsed it. I don't know whether that means anything or not, but you like uranium?
I do. Now, you have to look back, in this case, 15 years. The last uranium bull market was the single most important financial event of my career. I was early in uranium. I was in fact 4 years early. And there's a joke, if you're 4 years early to 10% discount, you're wrong. But the truth is, of the 4 uranium juniors that existed in the world, Sprott bought the float on all of them. And the worst we did, was 22 to 1. So if you have returns like that, even at the discount, being early is okay.
So uranium brings nice sentiment to you,
it really
fond memories.
It's a wonderful world.
Getting back to gold, do you think we'll have a rate hike in December?
I suspect we will, but I suspect that that's baked into the cake.
Okay.
I think the real story in gold and the US dollar is going to be disintermediation from Europe and Britain. I believe there's probably €1 trillion that want to get out of Europe and come to the United States. And I think that will strengthen the US dollar perversely, but I think it'll be simultaneously good for gold. That's something that happens once a decade.
Now, you spoke about gold in US dollar terms. So would you look at gold in euro terms perhaps, in yen terms? Do you prefer that?
I don't, because I don't spend euros or yens myself. That's getting a bit cute for me.
Okay.
I think that's more sort of the Dennis Gartman play.
Right.
My own belief is that we're putting in place the building blocks of a bull market in gold and gold equities of the type that we saw in 2003. After the 2002 situation where gold and the US dollar moved up simultaneously, and the type of bull market that we saw in 1976 after the 1975 simultaneous rise in gold and the dollar.
Now, others have been echoing that 2017 will be a turnaround year for gold. Some have said they would put 50% of their portfolio in gold. Well, what do you think of those numbers when people say, I'm 50% invested in gold?
First of all, I work at a place called Sprott, and Eric, who is a billionaire, is 100% invested in gold. I think it depends on who you are. We ask our clients to be between...
His risk tolerance is much higher than
we ask our clients to be between 10 and 20% invested in gold.
Okay.
And the difference between 10 and 20 is really their portfolio size and what the other portfolio constituents are. If, as an example, your portfolio had a lot of long-dated bonds in it, where inflation could kill you, you need to own some gold. In fact, you need to own a lot of gold. If, on the other hand, your portfolio is... developed real estate or something like that, where you have sort of a built-in inflation component yourself, you can afford to own less gold.
Finally, we have the upcoming U.S. election. A lot of people feel that gold also just needs this behind it.
I believe that the U.S. election is an interesting talking point. I believe, first of all, that the United States is a great enough society that we can survive either moron, and it's likely that we're going to get one moron or the other. Yes, gold responds to turmoil, and whoever gets elected, it'll scare the hell out of the other side. But the truth is that there are much bigger forces at play at the world economy than either Clinton or Trump, a fact for which I'm very grateful.
Rick Rule, thank you so much for coming by.
A pleasure. Thank you.
Thank you for watching our coverage here from the New Orleans Investment Conference. We'll have more for you. Stay tuned to Kitco.com. Thanks, Rick.
Great, thank you.